Welcome to Accelerate Your Wealth, a podcast by Rebecca Robertson, founder and director of Evolution Financial Planning. This series, we're focusing on female financial independence, looking towards a stronger financial future. Be sure to let us know your thoughts on the show, and please do connect with us on Facebook, LinkedIn or Instagram, or head over to www.rebeccarobertson.co.uk.
Well, you've just got me today. It's Rebecca on my own. It's a solo session today, and welcome to me talking about the cost of living crisis. So I'm going to talking to you about this because I've just come off a call with a BBC researcher, journalist, and they're putting together a piece of work that's not imminent. I'm not sure how long they're going to be working on it for, but it's going to be an interactive piece apparently. So I'll be sharing that when that comes out. They've been speaking to me and others, so it sounds like it's going to be a great piece of work. But what I thought I would share with you is some of the questions and areas that they asked me about and what I then discuss with them, because I think it will be super interesting for you guys to hear. It might not already be relevant for you, but I do believe in that you're then able to pass that information on to other people. So even if you think the cost of living is not affecting you now, you might be worried about it that it might do in the future. Or it might be that you are wondering, okay, well, what's around the corner? There's so much to think about. There's so many things to consider here. And quite often my ramblings, they feel like ramblings, but there were some real nuggets when I was talking to him, and I hope I can put those across as well. Now, I am going to be sharing some screens at different points in hope that that's helpful for those that are on YouTube, which is my new channel that I'm growing. So you can go and check that out, Rebecca Robertson on YouTube. And obviously, if you're listening to this on Spotify or iTunes or wherever else and you enjoy the show, please do leave a review. It really makes a big difference to the show, and it shows me that people are hearing and listening, and I should carry on doing what I'm doing. So the more clapping and liking that I get, then the more time, effort I develop into putting into the show. So it'd be lovely to hear from you. Hey, this is a special announcement. I'm sorry to interrupt the show. So when I recorded this show that you're listening to, this was 3 days before the bank base rate made a change and another prediction, which is, as you hear me say in the show, I don't usually like talking about predictions because it can just change so quickly. And here's an example of where that's happened. So at the end of the show, I'm going to do a little update just so you've got some further context. But please bear in mind that if you listen to this in a day later, a month later, this context can change, and it is a very fast moving world these days. But I hope you enjoy the show. So let's get started. Let's talk about, first of all, house prices. Okay, so the question came up about what should people do that are wanting to buy, they're renting at the moment, and basically if there is a recession, what will happen with house prices? Now this is such a big question. This is such a big area. It's not a quick answer. And if you look at what's being presented at the moment, even with everything that's gone on, house prices have still increased by nationwide statistics, which were released only in the last week or so, were 11%. So that was in July. As an average for this year, it's gone up by 11%. And normally, in normal years, and we can't really use 2020 or 2021 or 2022 as anything normal about it. But prior to that, in between, 2008 with the recession, so that period in between, it was on average around 5 to 6% a year. So even then, people that were renting were struggling to keep up with the house prices increasing. And what I found some people wanting to do is wait until the bubble bursts. Now, if you wait too long, you're talking a year or two, you could see anything from a 10 to 20% increase. And the issue with that is, can you save quickly enough? And this comes back to the cost of living. And this then comes into, we talked about housing association, mortgages, right to buys, alternative strategies via buy to lets as well. So that was a whole conversation around that, which was interesting. And then we started talking about renting, where rent is going up. But actually, Rightmove landlords, 63% of them have not increased their rent this year yet. And so they talked about, okay, well, what things could people that are renting do in terms of their cost of living if landlords were to increase the rent. So we found 63% aren't. However, if they do, it's a really good idea to have a conversation with your landlord in advance. So work out what your contract says, find out exactly what your rights are, so you can go onto the government website and research what your landlord should be doing to give you value for money. There's lots of regulations around what they should and shouldn't be doing. And that's not to say they're a bad landlord, but it's good just for you to understand contractually what their obligation is. And then you can have either now or at the time when your contract is up for renewal, you can then decide, okay, I'm gonna have a conversation with them. What are their plans? What are they thinking of doing? Do they foresee changing the amount of rent that is chargeable? Now, that might be a more imminent conversation you need to have with them based on the cost of energy, if your rent includes gas and electric and such like. And I'll come on to that separately in a second. So that was the piece for those people in that situation. But of course, people that are wanting to get on the property ladder, what can they do apart from if they can't get on a shared ownership or anything like that? So then a lot of people are actually either downsizing in the properties that they're renting, or which, you need to make sure you've got a really good credit file and your credit rating and your finances are in a good position, so that you can move, because there's a lot of expectations around, like a bit like a mortgage application now, when you then apply to be a tenant, is people are moving back into with their parents. So we're finding that a lot of people are not renting on their own and they're moving back in with family. Now, family could then look at maybe releasing equity from their house, like an equity release mortgage, and obviously it's best to get some really clear advice on whether that's suitable for them or not. But they're able to then gift that lump sum to enable the person to potentially buy a house rather than rent. So although the cost of living is putting a squeeze on people, it also then makes people have to make decisions. Now, the problem with making decisions is when you're stressed, you're then unlikely to be able to make a clear decision. So one of the key things I mentioned is that the mindset that we have around money, whatever stressful situation that you're in or you're becoming to feel, is that you listen to podcasts, you read books. I have a book on Amazon, 10 Ways to Accelerate Your Wealth. Those on YouTube, I'm just going to show you a picture. Go and check it out. It's a it's Amazon bestseller in 9 categories, and it has a 5-star rating. So what was I saying? I got completely thrown there for a second. Get the mindset. So there's 2 or 3 chapters in the book actually about mindset and how you're feeling about things and how things are being triggered for you. And that does sound a little bit woolly, sounds a little bit fluffy, but for some people who are in a really stressful situation, it's very hard to make decisions when it comes to shifting where they need to be thinking and what they need to be doing to take the action. They end up having, if it's not perfect, they won't do it, analysis paralysis, and they end up just feeling really overwhelmed and not really doing anything or making some bad decisions because they haven't had the headspace to take a step back from their current circumstances. So having the right support around you, having people to talk to, and finding out what all your options are. Now, the way I described it with the BBC guy was talking about an analogy of like running the marathon. So the next 6 months, and I'm going to talk a little bit about what's around the corner, is not going to be great for a lot of people. It's going to be a really quite bad situation for a group of people. And in general, there's going to be a few that are all right, and they're not even going to know what's going on. There's a percentage of society who knows, but let's just say like the upper wealthy are not really going to be too bothered about the energy price cap. That's not going to affect them at all. Inflation's not really going to affect them too much. But there's going to be a middle society where we're going to see some shifts and changes happening. And then, unfortunately, those that are in very low earning families are going to really, really struggle. So the crisis is going to affect people very differently. So what I was talking to you about is running the marathon. So depending on, you know, how big your marathon is, how big the challenge is going to be over the next 6 months, depends on how much effort you need to put in. So those that are, you know, doing the biggest marathon, they've got the biggest stretch, they've got the biggest commitment, they've got the biggest period to run over, the biggest struggles, need more help. But they also need more strength, they need more fitness, and they need to be more agile. And so with that, you can't be complacent and you can't be lazy, and you have to have a really strong mindset. So in that regard, it's imperative, whatever stage you're at, that you are listening to podcasts, reading books, and making sure you've got all the facts in front of you to enable you to make those changes. So what could the future look like? So there's the Bank of England put the Bank of England, the base rate up, obviously a little while ago now. And will it go up again? Yes, I do foresee that they will put it up again. Now, this information, I am referring to some data because I don't remember everything off the top of my head, so excuse me. But there's some information that was sort of like a projection put together, which is from the Institute for Government Analysis of the Bank of England. It's a monetary policy report, and it's usually issued in February and May. And it's issued by the Office of Public Responsibility, Economic and Fiscal Outlook. So what they foresee is that inflation basically will reach its peak around 10% around the latter part of this year. And then it will stop, which is it's now, so around now. And then it will start to, not straight away, next year, start to peter off a little. So what they're basically saying is by spring, we should start to see inflation really drop off. Now, the way I described this to the BBC guy was like a ripple effect. So the COVID and basically energy prices and energy costs and the supply and demand on certain goods around the world and staffing issues, etc., has had a massive chain of events that have increased inflation. So the Bank of England increased the bank base rate to slow that down in a hope that it will start to then peter off, which is what they're projecting to happen around the second quarter of next year. So for the next quarter, so the next sort of, you know, basically the summer months, sorry, the winter months, we're going to have some difficult periods, but it's not to say it's going to happen forever. It's not going to be ongoing forever. Now, if we have a recession in that period of time, then they sort of predict, we don't have a crystal ball, who knows what's going to happen with the war and Putin, etc. But I just feel that it's important for me to share what little information I can gather, and I do know if it can help people, then fantastic, or give a little peace of mind, then fantastic. So when 2008 we had the recession, it was impacted us for about a year or so, and it took a couple of years for things to sort of balance back out. But so previous years it took longer to recover. If we have an official recession, it will mean that we basically unemployment needs to massively drop. Unemployment at the moment is, sorry, other way around. Unemployment needs to be very high, whereas at the moment employment is very high, unemployment is low. So we'd have to have large institutions, large companies making mass redundancies, not because of, like, for example, Lloyds Banking are shutting branches. That's been coming for ages. That's just part of evolution of the high street, unfortunately, as it may be in the online world. Whereas I'm talking about large companies that basically don't need staff anymore. So you're talking shops like Asda and B&Q, and who employ thousands of people making mass redundancies, and then those people losing their jobs. We don't foresee that happening at this time. But if we have what would be like a bubble of a recession of some sort, even if it's in the statistics, in the stats, not necessarily with it unemployment included, the ripple effect, the bubble, if you like, won't be as big or as long. It will be over a shorter period of time. And in terms of the financial markets, currently most asset managers feel that we've had our drop and we've had the bad stuff happen. And when that typically happens, when we're in a bull or a bear market, the jump back can be super quick as it jumped down again. So similarly, there's a ripple effect when it comes to this. So the energy costs, energy prices, along with inflation, are creating a higher increase in things that we buy, which then increases everybody to increase their prices. So example, my local shop, he has beer and fridges and freezers with lollies and frozen food. And about a year ago, it cost him about £200 or £300 a month to keep those fridges and freezers running. Now it's costing him closer to £800. So it's over double, and we still have an increase coming in October, which at this point in time, Cornwall, who basically stipulate what they predict to be the cap to be set, which is set by Ofgem, as of this recording, was going to be for January, would be £3,615 from January. Now, bear in mind, it was £1,400 last October. It's a huge jump, and for a lot of people, that would be detrimental to their financial and family's well-being, especially if they were already on a poverty line. So, so I've lost my train of thought. I get passionate, lose my train of thought. Let me bring back to what I was talking about. I told you my rants, I can have these amazing epiphanies, and then I go off on a tangent, and you're just gonna, I'm really sorry, just gonna have to deal with it. It's just how I work. I'm learning to love it rather than trying to be a perfectionist around it myself. So I was talking about the cost of living increasing and the next 6 months and what we're seeing that change. So the ripple effect will be very difficult over this next winter. So I'm recording this in the summer. It's going to be difficult for a lot of people over the winter. But at this time, no one has a crystal ball. I don't know this for a fact. It's looking like that actually should start to resolve itself the second quarter of next year. Now, I don't like to make predictions because who knows, especially based on the last couple of years. But I think it's really important for me to share the data that I'm seeing, not just with my clients on conversations, but because of what data that I'm looking at and I'm finding. So I hope that gives you a little peace of mind that unfortunately the ripple effect, the initial bump that we've had, is not necessarily the biggest. Now, the reason being is because the cost of oil has a delayed effect. So we see it quicker on our oil, on our pumps, when we're getting diesel and gas, unleaded gas unleaded petrol for our cars and vehicles. But because of the way that gas prices are charged, it has a knock-on effect for the next quarter. So we won't start to see our energy prices go down until the second adjustment of next year, which is in the April time. Now, that increase that I mentioned of 3,363, the government are obviously offering a £400 help. So that's added to most households, added to their bill, and basically you then your bill's reduced, which will help a lot of people. The average increase is predicted to be around £70–80 a month from October. That's the average expected. Now, for some that will be different. It does depend if you're on a meter, if you're paying on a card, if you're paying by direct debit, etc. So it's really worthwhile going back to the point of knowing where you can buy the cheapest unleaded petrol. Do you fill up in one go? Do you do when we're back to school? Do you look at doing shared journeys with other parents? Is it best to get a bus rather than paying diesel? Trains are usually more expensive these days, but there are some deals for some people. You can get cheaper train tickets. What ways could you reduce using your petrol and be more cost effective with it? So planning journeys better. When it comes to the household, insulation will be my biggest tip. How can you draft exclude, reduce the amount of hot air getting out of the house, buying duvets, thick duvets now in the summer rather than waiting to winter when there'll be a higher demand for it and they're likely to be more expensive than now in the summer. And extra clothing for the kids, extra woolly socks, and shutting doors, having certain radiators turned off where possible. We have a log burn fireplace, so we're going to be stocking up on loads of wood ready for the winter now over the next few months, keep it dry, and then we can use that in the winter time. That will reduce our gas bill. So there's lots of things, practical things that we can do, but again, it is like a muscle. It is like we get really busy in our lives. It can feel very overwhelming. You have to see it like a project, like a challenge, like the marathon that you're going to run, and what practical things as you as a family, how you can come together to avoid conflict. Bring the children into the equation. Can they get pocket money rather than just having, can they help around the house? Can they help their neighbours? Can they get a paper run? Can they help at a local farm or a local shop? What could they be doing to bring value to the house, either by helping financially or just providing support as a family? Bring the conversation to the dinner table rather than bringing the stress and potential guilt or shame that we might be holding as parents, because that is not a good baton to hand over to our children. Practical solutions that we can find to bring them together and sit down and be honest with them about and have honest conversations. Looking at your outgoings, so looking at what you're currently paying out for and what you could get rid of. Insurances, are they good value for money? Do you still need them? Do they put the right things in place? Make sure you have got life cover, you have got critical illness, you have got income protection where you need it. Make sure you do have the right things in place. So we didn't talk about too much of that kind of thing with the BBC guy. That's something I specialise in. And I think it's worth mentioning. So they're going to be doing a bigger piece around that, and that's a whole other piece. We then went on to talk about debt, and we talked about those that are for their mortgages, what their options are. So if you were on a fixed rate that was coming up, what should you do? Or if you was on a variable rate now, what should you do? And what I discussed with them is, if you've got somebody who is on a fixed rate coming up for renewal, you can go to your existing provider early and find out what's available, and then research the market, speak to a broker. I have Jenny in my team who can help with that kind of thing. So do get in touch with us if that's something you're interested in. And that we can research the market, a broker can research the market. There is often a fee involved, so it's, whether you want to do that yourself, you can. And research whether that the fixed rate you're getting offered by your existing company is better or not. Now, the thing is, with a new company, it's a new application, so you need to give it time, usually at least 8 to 12 weeks at least, for a remortgage, which is where you take one mortgage away from another to another company. But you want to make sure that you're in the best financial position, so it's worth sort of touching your toe in the water with that new lender to make sure that you meet their criteria from a lending perspective. Quite often, if you're going to a bank or building society directly, their brokers, or they're not brokers, sorry, their advisors are very, very booked up in advance. So you do need to, they often don't have a huge amount of staff. So getting appointments and having all your paperwork ready, your bank statements, you can answer all their questions, having your accounts if you're self-employed or a limited company director ready, making sure that you've got all your ducks in a row, and you get a copy of your credit file, make sure there's nothing on there that shouldn't be on there. Same if you're renting, that's a really good tip as well. And then you can see if you can get those better mortgage deals, and that might save you money. Now, but if you have other debt outside of your mortgage, you might need to look at, okay, is it worth me, I don't know, selling my car, for example, downsizing my car and then getting rid of my car finance? Is it better that then I'd get a better mortgage rate if I'd get better lending? So there's lots of things and lots of elements like with mortgages are into shifting parts, and you can't make those financial decisions until you have the facts, and everyone's personal circumstances are different. So again, it's a bit of a marathon, it's a bit of a muscle that we need to stretch, we need to work on, and research the different options that are available to us. When it comes to debt and the spiral of debt, it's crucial to keep your head above water. And it's really important that when you're looking at clearing off debts, that you're paying off the ones that have the highest interest rates first. And you can do that on a gradual basis, but by keeping all the credit cards as much as you can on 0% is imperative. Now, for a lot of people that are in the lower end of the scale when it comes to their outgoings might be, for example, 30-40% of it goes on rent, another 15-20% of it goes on utilities and gas and electric, another 15-20% just goes on general living, food, etc., and they've just got like 10% left over, and maybe even less, that maybe none, maybe at a point where actually you're in a situation where you are having to use credit cards to survive, to pay for food, etc. That is going to be a very likely outcome for many people over the next 6 months. But what's imperative with it, if you are in that situation, is that, for example, you can buy the produce using maybe a cashback kind of card, whether that's Nectar points with someone like Sainsbury's, or you're using a credit card that when you buy certain things, it gives you points back. I believe Utility Warehouse, who's a gas and electric company, they have something similar. Credit cards with air miles are not as competitive as they used to be. But wherever you can research different options and find ways to maximize that spending. You know you're going to spend it. You need the diesel. You know you need the food. You know you need things that need to be bought. Put food on the table, right? Then if you find that the interest rate, the rolling interest rate of that purchase is like 27, 28, 29%, then you need to transfer that debt onto a 0%. The problem that a lot of people have, however, is that you can't do that on a monthly basis. And if you're having to continually do that on a monthly basis, it can become very difficult, because credit card companies won't allow you to have a excessive credit versus debt. So let's just say you have a credit limit of 10,000 and you're using 75% of that, so it's 7,500, and then you apply for another credit card for 5,000 because you want to transfer one from 5,000 that's on a high interest rate onto another. Then you're in a very difficult situation, because then you're asking for 15,000 in terms of your credit. You're increasing your credit. Now, they assume you want to buy something with that. They don't assume that you're doing the debt consolidation from a lending perspective. And so therefore they say, no, you can only have a credit limit of 2,000, for example. So then you get yourself into this sort of chicken and egg scenario. And that's in a worst case situation for a lot of people. If they have stopped their spending and they're then just keeping up with the monthly payments on a 0%, then they maybe have too many on 0%, all coming to renewal at one point, and then they find it difficult to then get the new credit that's available. So again, it is a muscle, it is a marathon. You have to keep your head above water, and you have to understand all the options that are available to you. There's some amazing websites out there that can help you when it comes to getting debt advice. Step Change is a charity. So if you go to www.stepchange.org.uk, they are actually, no, it's just .org, sorry. They are an amazing resource that can help you. Another website is moneyhelper.org.uk, which is a government-backed website that's also linked to PensionWise. They used to be part of the Money and Pension Service, which is a government-regulated organisation. There's also Crisis, so www.crisis.org.uk, who together we will end homelessness, and they're all about supporting their members and their families to avoid going into homelessness. And that's a really good website that's also available for people to look at. So we've talked about quite a few different subjects today: mortgages and debt and house prices and renting and buying and inflation and what's around the corner and gas and electric prices. I've talked about lots of different things, and I hope there's something there that sparks your interest or gets you thinking or gets you moving and making some decisions. But more than anything, if there's what I really empower women to do is, if there's something that you need to make a decision about, find the people that you need to help you make that decision, so that you can then get on with it, move on, and you'll be able to then feel so much more freer, and you'll be able to feel so much more in control and basically more confident. which allows you to move on and make more bigger, better decisions for you and your family. I hope that's been a help. I'd love to hear your feedback. Do leave me a review if you found that helpful, and sending you all lots of love on what's a sunny day today, but you never know when you're listening to this, right? It could be a gloomy day when you're listening to this, but today is a beautiful day, and I'm wishing you all the best of luck when it comes to whatever you're up to at the moment. Take care. Hey, so I promised you a little update. I hope you enjoyed the show thus far. So as of the 4th of August, I'm recording, this is being released on around mid-August. Bank of England put bank base rate up to slow what they're predicting to be a further inflation peaking at 13% by the end of this year in 2022. So bank base rate is now at 1.75. So that will mean that when I've talked about in the show about bank fixed rates going up and about standard variable rates going up, that's what you'll start to see. So the advice stands, the suggestion stands to look at jumping on a fixed rate now, especially if you're not planning on moving or got great big changes in the future. Now they're expecting inflation to peak at 13% by the end of this year. Now, I've already mentioned in the show that this winter is going to be a very, very tricky, and for the lower wage earners, it's going to be particularly very difficult. So you're going to see a lot of doom and gloom over this winter period. The Bank of England also forecast that the economy will shrink over this winter. We're quite lucky in the summer because what happens is we're spending more in the UK economy from holidays, etc. But that will shrink going into the winter, especially when the people will start to see being more careful. The Ofcom have obviously set October's gas and electric rates, rates for the gas and electric bills. So the Bank of England are projecting that we will go into this recession, and that ripple effect that I talked about will go into 2023. And there are some other pieces of news that I've seen that they see it will go into the whole of 2023. Other pieces previously to me recording this said it would only go into the second quarter of the 2023. So now, however, at the moment we've got a big thing going on with who's actually going to be running the country as of the 1st of September or the 5th of September, something like that. And Liz Truss and Rishi Sunak have very different views as to how they're going to tackle this. Gordon Brown, who was the previous Chancellor of the Exchequer and basically was a Labour candidate, I'm not sure the right word, MP, is saying that more needs to be done. There's lots of things that need to be done to look after lower income families, but it's going to be an adjustment for everybody across the board, apart from those in the top percentiles, who it doesn't really matter. For everybody else, it is going to affect people to a certain degree, how they're going to make cutbacks and etc. But it is an opportunity, however, to get your finances in a place where they're super strong, and tick all the boxes so that you're maximizing the position that you're in. So that's why this podcast is here. That's why you should go and check out my book, 10 Ways to Accelerate Your Wealth. And if you do like this podcast, please do leave a review. It really does make a big difference in the rankings and the downloads and all that kind of stuff, because it then shows more people our podcast and we can help then more people. So that's a little update from when I recorded this, and I will see you on next week's show. Sending you lots of love. Take care.
Thank you for joining us on today's episode of Accelerate Your Wealth. For further help or to connect with Rebecca directly, please head over to the website www.rebeccarobertson.co.uk, where you can find further information on our planner, book, and how to further maximise your wealth. For any regulated advice, please do head over to www.evolutionfinancialplanning.co.uk.